Hello, everyone, and welcome to another episode of Passive Income Doctor. Today, we're doing something a bit different, which is going to be price predictions for the property market for Australia for 2026. And wow, time's really flown by. It didn't feel like too long ago, where it was kind of start of 2025. Everyone was excited to see how the market will go. And I think it's a reminder as well that often, it's very easy to put investing, including property investing, on the back burner. Life gets in the way. It could be kids, it could be career, hobbies on the weekend. It's very easy to let time go past. And obviously, this year, a lot of property markets have performed very well, some more than others. So, today, I'm going to be discussing SQM researchers Louis Christopher's Housing Boom and Bust Report 2026 and be going through kind of his predictions and commentators' predictions about what's in store for the property market for 2026. A lot of people have reached out and kind of asked myself as well, where do I see the market as well? A lot of times I look at these commentators, but also look at fundamentals, things like vacancy rates, days on market, underlying pressure, jobs is very important. Affordability metrics are very important, which I'll touch on in this episode as well. So, looking at SQM's Housing Boom and Bust report for 2026, Brisbane, Perth, Adelaide, and Darwin are kind of predicted to kind of lead the pack. And it is quite remarkable in terms of, for example, Brisbane, Perth, and Adelaide. I myself thought it would kind of slow down in the last year or so, but Adelaide kind of started its upswing probably 2018, and now it's kind of 7, 8 years, which is quite remarkable. Perth kind of started its run, kind of later part of 2020, 2021, had a very strong 2022, kind of stabilized a little bit, and then gone on another tear as well. And obviously in the news, a lot of um, people reporting very hard to find a rental house, for example, but then also to purchase as well. Multiple people putting in many offers, often selling, within a week or so. And I myself have also recently sold one in Perth. Well, does that mean I believe that Perth is going to, reach its peak and are going to go backwards? Not necessarily. But I think sometimes it's kind of, you know, adjusting your portfolio, seeing what makes sense, maybe recycle some equity, maybe get some debt back, and maybe go into some other markets that might be more towards the start of its growth cycle. Brisbane is also an interesting one. A lot of people say kind of 2032 Olympics will, it's going to boom from now to then. I myself not super certain of that, just because there's, a week or so of Olympics and there's some infrastructure in terms of stadiums, etc. That doesn't necessarily correspond to high price growth. I think it's more important factors such as strong demand, strong economy, strong jobs, low unemployment, and also lack of supply as well. And, Brisbane, for example, has, doubled, and I know some places, for example, Logan, pretty much tripled in the last 5 years or so. And is it necessarily going to double or triple again in the next kind of 5 to 6 years? Not so certain of that. I think affordability is kind of getting a bit constrained as well, looking at some of the statistics. For example, Perth average incomes are still higher than Brisbane. Um, so, so I think Brisbane is one to watch. Now, let's have a look at some of the capital city forecasts, which I'm going to bring up here. So basically, it's got kind of um, four scenarios here. Scenario one, which is the base case, 25 to 50 basis point of a rate cut from middle of 2025. Steady but sluggish economy, inflation 2.5 to 2.7%. Scenario two is kind of where inflation's a bit more sticky. Um, uh, No rate cut until late 2026. Inflation 2.75 to 3.2, and a slower economy. Scenario three is kind of a global slowdown spillover, 0.75 to 1% rate cut throughout the year. Unemployment rises to 5.5%. And then scenario four, which he has called economic rebound, rate cuts throughout the year of about 0.5 to 0.75%, a lower inflation of 1.9 to 2.1%, and falling unemployment back to the low fours. So let's have a look at the base case. For Perth, it's a positive 12 to positive 16% growth. Brisbane, a very strong 10 to 15%. Darwin, very strong 12 to 16%. Melbourne, 4 to 7%. It is interesting. A lot of people have said Melbourne's going to really outperform 2026, and a lot of people were saying outperformance in 2025 as well. I think certain markets in Melbourne have done quite well, but I don't think it's a citywide phenomenon. For Sydney, lower positive 3 to positive 6. Adelaide, positive 10 to positive 14%, which is pretty high. And also, Adelaide, as I said earlier, has had a very strong growth for the last like 7 years. Hobart, positive 4 to positive 7%. Canberra, positive 3 to positive 6%. So kind of combined capital city average of positive 6 to positive 10%. I'll go through scenario two as well, which, I think this is possible as well. A lot of people think that, inflation is back in the target range and, it's all good. But to be honest, I think there's still a lot of stimulus, unemployment still relatively low. And I think there's could be a chance that inflation might come back. And if that's the case, the RBA in Australia is probably not going to cut rates at all. And, some people in the media have talked about even possible rate rises. And it's crazy because only like a month or so ago, everything in the narrative was talking about further rate cuts this year and then also throughout first half of 2026. So in this scenario of sticky inflation, Perth 10 to 14%, Brisbane 8 to 12%, Darwin 3 to 7%, Melbourne 2 to 7%, Sydney 2 to 6%, Adelaide 9 to 13, Hobart 3 to 7%, Canberra 1 to 4%. So you can see overall it's kind of like a lower figure. So Louis Christopher said 2025 has been a year of resilience for the Australian property market, driven by strong population inflows and initial monetary policy easing, plus in recent months, the first home buyer deposit scheme. However, as we look to 2026, the outlook is shaped by a range of potential economic paths, from a sluggish economy, which is our base case, through to sticky inflation, delaying rate relief to a global slowdown, or even a robust economic rebound is possible. Our scenarios highlight the market's sensitivity to these factors, with Perth, Brisbane, Adelaide poised for double-digit growth in all cases due to supply constraints and economic momentum. The first home buyer deposit scheme, I think, has been really raised the prices in the lower affordable markets. Anecdotally, talking to agents and also from news articles as well, pretty much even before it came into effect, I believe November this year, there was already people kind of rushing in to try and get ahead of these things. And I think this is an example of unintended consequences of government policy. Obviously the stated aim by the government was that it will increase housing affordability, but in a lot of cases, it's just increased the prices. And on the other hand, some people think it's irresponsible policy, but obviously it's kind of government guarantee, so you don't have to pay LMI on a 95% loan, so you can get in with just a 5% deposit. However, you still have to be able to service the loan as well. And at the moment, kind of APRA assesses that you can afford not just at the current interest rate, but then your current interest rate plus a buffer rate of 3%. And I guess I will end today's episode by talking about Darwin as well. And this is a market that, in the last 12 months, I've been quite active in. Um, a lot of people were a bit hesitant, obviously kind of stigma about um, natural disaster risks. And obviously there's been a recent Cyclone Fina. And also, um, from 2013 onwards, Darwin has had a very, very subdued property market. Some prices basically are selling now for same or similar price to like kind of 12 years ago. So then a lot of people would say, why would you buy? But I think this is similar to even a couple of years ago. A lot of people thought Perth, oh, it's just a mining town. It's not going to grow up. It's not going to grow. But kind of Perth kind of turned those haters or proved those doubters wrong. And yes, Darwin does depend quite a bit on natural resources, for example, gas as well. But there's also, a strong government sector. A lot of people work in the public sector, government jobs, relatively decent incomes. There's healthcare as well, um, oil, gas, and kind of talk of some other new projects coming up. Middle Arm project, Barossa, I think Tambourine. So you guys can have a read of those as well. And I think obviously Darwin is a smaller capital city, population 200,000, probably comparable to, say, a major regional such as Townsville. And as everyone knows, Townsville has done very well in the last couple of years. The yields are also have been very strong, kind of 5.5, 6%, and even some, a year ago, kind of up to 7%, and there's not actually any kind of other capital city in Australia that offer those average strong yields. And one thing to keep in mind on a balance view is it is a kind of higher percentage of renters, and also a lot of lending in the last 12 months has been for investors. So some people would say, Darwin is just investor boom, it's going to come backwards. So that is something to monitor as well. But overall, there's still a strong rental demand. There's not a massive supply of housing coming online. So I think, it will have a strong 2026 as well. But look, time will tell. So leave in the comments, reach out, what are your thoughts on what the property market will do in 2026? Which market do you think, which city do you think will perform the best? I'll be interested to hear your thoughts. Until next time.